If you are self-employed and a first-time buyer, it does work slightly different getting a mortgage to those who are employed. Today we'll be giving you our top tips on how to get onto the property ladder. Hello, welcome back to our channel and podcast. My name's Gemma and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifti joining us once again. And for those of you who don't know Ifti is a trained accountant and mortgage broker who's been in the industry for over 11 years. Welcome back, Ifti.
Hi, Gemma. How are you doing?
Oh, very good, thank you. How are you today?
Yeah, I'm very well. Thank you, Gemma.
Good. Today we are talking all about self-employed. It is a little bit different for those who are self-employed to get onto the property ladder. So maybe we should just kind of confirm who is classed as self-employed?
Okay, so self-employed traditionally is people who work under their own name, right? So they're not on a payroll somewhere working for an employer, but they work on their own name. Like if you take, for example, a plumber, an electrician, usually they are known as self-employed. That's from a technical angle, but from a bank's point of view, they have a slightly different classification. So if you're someone like a company director or somebody who owns quite a lot of shares in a company, or people who are traditional self-employed are also categorized as self-employed. And there's another category called contractors. They also fall into this category. So it's kind of a broad spectrum when it comes to the banks, right? But the traditional definition of self-employed is slightly different. So if you fall to any of these categories, generally banks consider you as a self-employed person.
And why is it sometimes, difficult or more difficult for you to get a mortgage if you're self-employed?
Yeah. There is few things which are obvious. I'll explain that first. So if you're employed, every month you get a pay slip. You can say, okay, this person is earning so much. Their income is not really dependent on the performance of the company. It's more or less sort of guaranteed, right? If you got off a letter which says every month you're going to be paid so much, right? So those people, it's easy for the bank to verify their income. You can look at the pay slips. Banks can go to HMRC, look at HMRC records, and they can verify the income. But if you're self-employed, the problem is your income can vary. There are seasonal businesses where sometimes it goes down, it goes up, and self-employed don't really get pay slips. Even if they do take a pay slip, it's generally for a small amount. So banks really struggle to verify their income to start off with. So that's why it becomes a little complicated. Usually banks look at their tax returns, right? So for example, if somebody's like a plumber or electrician, the first example I use, they have to file the self-assessment tax returns every year. So the banks look at that. But if you're a company director or a shareholder, the banks look at their tax returns, they look at the salary plus their dividend, right? So that's what they mainly look at. Now, this document is only produced every year. So you might have done your accounts last year, say in April, but let's say we are now in February, right? So 10 months passed since, but you can't really verify your income as such because your final accounts has not been submitted and you haven't filed your tax returns. So during that 9 months, a lot of things could have happened, right? So banks are a little bit more cautious when it comes to self-employed as opposed to employed.
So what are the options then, if you're self-employed and you've just started the company or you don't have that history?
Yeah. So so there's kind of two aspects to that question. Firstly, if you're self-employed, banks mainly look at your tax return, right? So that is like you take an electrician or a plumber. They look at your accounts which has been submitted to HMRC. Whereas if you're a company director, you look at the salary plus dividend. So traditionally, those are the numbers that banks look at, right? So if you are going for a mortgage, you need to make sure those numbers really add up to your mortgage. That's quite important. But at the same time, what happens is there are banks who have come up with sort of alternatives. Like sometimes you can check your accounts, right? So if you look at your company accounts, there are some banks, not everybody does it, who will look at your company accounts. So for tax reasons, a lot of people don't take too much salary and dividend, even though they make a lot of money in the company. They just stick to a basic salary and a basic dividend, right? So they just take what is needed, right? So that's what they do. And they build up the balances in the company because they take out money otherwise. You pay dividend tax, right? So for people like that, there are some banks who have come up saying, hold on a second, these guys are actually making money. So if they really want, they actually can take the money out, right? So we kind of understand that is what they say. And they sometimes look at your company accounts. So in which case, they look at your profit and loss account. So there are alternatives like that. Obviously, I mentioned another category as a contractor. So sometimes with contractors, you can work on a day rate basis, right? So you don't need your tax returns or you don't need your company accounts, but we can look at their day rate as a basis for looking at it.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
And what other options might there be if it's proving to be more difficult to get a mortgage for a self-employed person?
So I think with self-employed, the main thing is you need to prove your income in these ways because that's majority of the banks that we look at, right? But what has happened over the last few years is, of course, if you take, for example, the pandemic, right? Some people have had low income during that time because, it was kind of an unprecedented thing, right? Nobody was expecting this, right? So sometimes banks understand this, right? So they have come up with things like bespoke underwriting. So with bespoke underwriting, they sometimes ignore that bad year because, it was a very exceptional year, right? So we can sometimes look at those options, right? If you have had a bad year. And like you asked previously, most of the time, if you're self-employed, you need at least 2 years accounts. But we can now see sometimes banks look at the last 1 year's accounts, right? So there are some options that have come up like that, which sort of can help the self-employed. But the key thing here is trying to understand your mortgage requirements in advance, right? So that's when people like us, like advisors, can help you. So you can come and talk to people like us and you can plan ahead, right? Because sometimes, clients come and say, oh, my company did very well. We earned, say, 100,000 in the year. But then all of a sudden we are excited as well, thinking, okay, this person can easily get a mortgage. But to see, they've only taken a dividend of £10,000 and a salary of 10,000, right? In most banks' eyes, that's only a 20,000 income, right? So this is why I'm saying try to plan this in advance, right? So if you get some advice, sometimes they can say, okay, if you want to get a decent mortgage, you need to take so much as salary and so much as dividend, right? So a little bit of planning sometimes can help. Obviously, you made money, because otherwise you can't take dividend, right? So that kind of thing you can do to sort of mitigate this issue where you come and suddenly realize that you can't get a mortgage, right? So planning is always a helpful thing, is what I think. Yeah,
definitely. Any more top tips for our self-employed viewers out there?
Obviously self-employed is, there's a majority of people in the UK who are self-employed, and like anyone else, they need a house as well, right? So like most others, they need a mortgage as well, right? So there are banks out there to help you, right? It's not the end of the world. Like I said, planning is key here, because if you plan in advance within your income limits, you should be able to get mortgages done. So speak to an accountant or speak to a sort of advisor like us who can help you. Obviously, sometimes you want to save some tax, but that might be at the cost of your mortgage, right? So you need to sometimes prioritize, right? Sometimes you have no choice but to take the dividend, right? Because otherwise you're not going to get a mortgage, right? So you can't sometimes have both, right? I think planning is key with self-employed. If you plan these things out early, I'm sure you can work out your mortgage. Recently, we have seen quite a lot of people who've been affected by the pandemic where incomes dropped. We have seen people, who had taken sort of certain government benefits during the pandemic time. So we managed to find mortgages for those people, right? But sometimes what traditionally happens is they just walk into their own bank, right? I'm not saying their own bank won't be able to find a solution, but there are sometimes lenders out there who might look at exceptions, right? So those are options you probably want to consider as well.
Yeah, specialist lenders aren't on the high street, so that's something to bear in mind, isn't it? All right, well, thanks, Ifti. Again, more great advice. Just wanted to put our regular reminder out there that these points may or may not be applicable to everybody, so please do check if they are suitable for you. And if you don't have a mortgage advisor, I will leave our WS contact details down below, as we are always more than happy to help. A little reminder that as the mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.